I'm on a journey to get you the best results when it comes to applying for credit cards with American Express. I want you to have the highest approval odds and get the highest limits possible. I've been dropping video after video on this channel throughout the life of this channel, explaining various tactics and strategies to help improve your odds and get you the highest limits possible. If you're new to American Express, I'm trying to help minimize your learning curve. If you are established with American Express, I'm trying to help combine what you may be doing right already in conjunction with new information I'm providing to help you get better results with them. I have another one of those insights in this video. I want to cover another one of those basically application features or credit report features that can help improve your approval odds and also help improve the limits that you can get on these cards by making you, again, a lower risk borrower and a high potential, high profit client as well. So before we get into that, I want to give some context for any of you who may be new to my content. I am a career banker by trade, retail banking to be specific. That basically means consumer banking as well as small business banking is in my backyard. I'm dealing with all types of consumer banking products and lending products. I am dealing with all types of small business banking products, cash flow management, and lending products. I also have an active mortgage license, active life insurance license, active Series 6 FINRA investments license, small business banking and credit certified. I've been in throughout financial services for over 13 years, in the banking industry for over 13 years. So I'm somebody who not only has personal experience with advancing my personal finances to really respectable heights over the years, recovering my personal finances from really tough times, but I have great professional experience on the things that I'm covering on this channel. So hopefully that gives you some context on who you're getting this information from. So when it comes to American Express, what we've learned about American Express is they have a pretty niche audience or clientele book who they like to do business with. Now, they have clienteles from all walks of life, but there's a bread and butter basket of clients that they just love to lend to. They love to approve and they love to lend to. These tend to be what would be slightly older, more established individuals with strong established personal financials and good high incomes. This tends to be the trend with American Express. You're more and more likely going to see individuals who are 40 plus, 50 plus, even 60 plus with American Express credit cards the most. And they're going to have very established financial reputations, established financials overall, good, strong incomes. And they're going to have one additional feature that does not get talked about very much when we start talking about different perks, benefits that American Express is looking for in underwriting on applications and throughout combing through your credit profile. And that particular feature is going to be your average age of account. This one is really kind of under the rock in the sense of being one that's not covered that much in the personal finance space if you keep up with other channels. This is one that is very important, and it's important for us to put context on why this is so important. And I want to give you some insight on how you can make the most of this beyond just waiting for your account to get older. I do want to give you a little bit of extra context, so stick through on this video if you're smart and want to get the most value out of it. So when it comes to average age, you can best kind of take this into account as if you give someone something heavy to lift and you give it to that person, you put it in their hands, your natural inclination, especially if you don't know that person or if you just don't know their capacity to handle what you just handed to them, is going to be the most concerned about them managing what you handed off to them the earliest on. So if you think about handing somebody a really heavy bag or a heavy item, your first thing you're going to do when you're unsure if they can handle it is pull your hands out. Your eyes are going to be locked in on them holding that item. And you're going to do that for a particular period of time early on. It might be 2 seconds, 5 seconds, whatever the case may be. As they show the ability to handle what you handed over to them longer, you start to relax more. You're going to stop holding your hands out. You're going to stop staring at them holding it. And eventually you're going to go on with the next task, feeling more comfortable that they can manage. You might check in on them from time to time, but you're going to get more comfortable the longer they handle that weight. And if it gets deep enough, then you're going to actually probably be willing to hand them even more if you need them to. That's kind of a bit of an analogy of what average age of accounts breaks down to in an underwriter's eyes and credit card lender's eyes. They're looking at your average age of accounts. The newer it is, the more they're holding their hands out and glued to the scenes on if you can manage what they just just extended to you or what you have been previously extended by other banks and institutions, other lenders. The longer you manage it, the more they're going to look at you with confidence and say, okay, I'm going to also hand you what I have to hand you, and be more confident that you are going to manage it responsibly because you've had similar with previous, institutions similar to ourselves as the lender or the credit card issuer, and you've managed it well from what we can see. And the longer you accomplish that, the more you let that metric build up, the better it is. So let's discuss what having a healthy average age of accounts looks like. If you're looking at Vantage, they break down anything under 4 years as needs work. They consider that a relative negative. That's not a good window of time to have an average age of accounts. Once you get to about 5 to 6 years, that's considered fair. 7 to 8 years is good. 9 years plus is considered excellent. When you look at FICO, it's pretty similar. They don't go into the depth of the metrics, but they describe the average FICO high achiever, average age of accounts to be 9 years or more. So it's very identical to Vantage in that capacity. So we can basically port over Vantage's metrics and point of view on this over to FICO for the sake because FICO doesn't break it down themselves. So when you look at that, that basically means that you need to have some bridge between the oldest account and the newest account you have, averaging out ideally to 9 years plus, or at least being in a range of 5 years or more to be at least in the fair category. When you talk about American Express underwriting, it is well documented that people have had, credit histories a year, 2 years old, whatever the case may be, very young and get approved for American Express credit cards. What likely turns out to be compensating factors that balances them out. It might be a high income or some other feature that allows that borrower to still look like a good bet to lend to. But when you're dealing with trying to get approved for, the higher end credit cards that American Express is going to offer, higher limits, because again, those limits are going to be an extension of the comfort that they have, the low risk that you project or the lack of low risk that you project is going to kind of determine those limits significantly. So you can't do much about it, but other than participating in your credit building journey, that basically means make sure that you are hopefully starting as soon as possible, or you've already started as soon as possible. And again, if you're already with American Express, you're beyond this threshold. Hopefully you've stuck through this far. What I do want to drive home is be very strategic about your personal credit profile when it comes to adding new accounts. You have to be mindful that you can't do a lot about the accounts that you started your credit profile with that are carrying the age on that credit profile. So you got to be very delicate about adding new personal accounts because you can drive down the age, and age is a reasonable factor. When you look at Vantage or FICO, it's about that middle range of importance on your credit profile of your credit score. So it's not like it's like inquiries where it's towards the bottom. When you look at average age, it's usually about the third out of the 5 or 6 metrics that Vantage or FICO are going to be grading your entire credit score from. Another component that I would put into play is make sure when you're applying for new accounts that you try to do them in tandem with each other. Do your best not to just apply arbitrarily. I got a credit card in January, an auto loan in March, personal loan in July, like on and on. That's not a good cadence for developing your personal credit in a way that works with age. Strategically map out your borrowing as far out as you can see and try your best to stick to it. So when you get new accounts, they're coming in at the same time. You take the beating on your credit report, you take the inquiries, you take the new age, etc., and you allow them to age right on top of each other. So this is the whole concept of gardening. If you're embedded in the personal finance space, especially here on YouTube, you've heard other prominent YouTubers in the personal credit, personal finance space talk about the concept of gardening. Basically applying for or going on an application spree where you apply for as much credit as you think you need or you're striving for in that particular window of time. And then once you've gotten that accomplished or just hit your wall, you pause and relax for 6 months, 9 months, a year. You relax and let your credit heal. You let your accounts age. You let the payment history report. This is the strategic strategy behind the concept of gardening. And when you're dealing with American Express, who again, as I said at the top side of the video, has a niche towards those with established financials. So these are going to be those FICO high achievers. These are going to be people whose average age is 10, 15, 20 years plus. They've been in the game for 20, 30, or 40 years with credit and financial metrics. So this is who American Express really has the best appetite for. And that's what you're striving to become, or what you're striving to be. You need to leverage your average age very strategically. Again, no, you cannot control making your accounts grow faster, but what you can control is how strategic you are are in adding new accounts, the sequence and the cadence of adding those new accounts. So that way, and push comes to shove, yes, I have new accounts. My average age may take a hit for this period of time, but I've gotten as much credit as I need for an extended period of time. I've at least hit a wall for an extended period of time. So this is going to put me in a position where I pretty much have to let these accounts age in order to move forward anytime in the near future on my credit again. So don't sparse out your new accounts. Don't sparse out applications, like sporadically, 2 months here, 3 months apart there. Like have 6, 9 month, 1 year cadences with your credit. Apply at one time. Do your best to try to be mindful about getting them in sequence with each other as you possibly can to protect your average age of accounts as much as you can. Because again, when you're dealing with American Express, you look at who they like to lend to. We're going criteria by criteria. This is probably my 4th or 5th video really diving into American Express's appetite and preferences on who they like to extend their cards to and who they like to extend the highest limits, their best cards, the highest approval odds to. Average age of accounts is one of those major components because again, when you look at the average American Express customer, when you do research, you will find that it's like a 60-plus-year-old. There's somebody who's well established into their financial journey, well established into their credit journey, and has high spend, has established income, and has been doing these things, has a track record of these things for decades. So for those of us who are to the younger side, 50 and younger, 40 and younger, if you're not already in that bucket where you started the game in the earlier stages of your life, late teens, early 20s, then the least you can do is be responsible and strategic in the accounts that you establish going forward to give yourself the best shot of either getting in with American Express and reducing your roadblocks or pitfalls and getting the best approval odds and getting the best limits. Or if you're established with American Express and you're continuing to expand your relationship with American Express, again, this is gonna put you in a position where you can, if you don't already have this figured out, you can add this to your existing successes and get better results with American Express. So comment down below and let me know what your average age on your credit report is looking like. Comment down below and let me know what your history with American Express is looking like. Let me know if American Express is your preferred lender, or do you have other lenders that you prefer and why? Comment down below. To all my pioneers, welcome back. To my new viewers, welcome in. I want each of you to support this channel so this channel can keep supporting you. Like, comment, share, and subscribe. Very, very effective ways to help this channel keep growing so this channel can keep putting out content that helps you keep growing. Other than that, I want each of you to stay focused, stay in motion. I'll see y'all soon.